Roundtable, sponsored by Global X ETFs.
Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Howe, in for Jack Otter. Coming up, stocks stalled this past week as investors await clarity on when the Fed will cut interest rates. Big Tech's Magnificent Seven haven't been riding quite as high. RBC Capital Markets head of U.S. equity strategy and one of Barron's top 100 women in finance, Lori Calvasina, is here with her take. And there's a TikTok battle on Capitol Hill, and I don't mean a dance-off. We'll look at the winners, losers, and possible buyers if Chinese parent company ByteDance is forced to sell. Then, that's one big rocket. SpaceX completing a record-setting launch. What investors here on Earth need to know. But we begin with our expert panel and three things investors ought to be thinking about right now on the Barron's Roundtable. My colleagues, Ben Levison, Al Root, and Megan Lenhart. Ben, the market was down a smidgen this past week. I, for one, am outraged. What happened?
Well, I mean, the S&P fell for a second week in a row, and this is the first time it's fallen for 2 weeks since October. So clearly the world is ending. Okay, maybe not. As you said, it fell 0.1%. We had some inflation readings. The first one came in, the consumer price index, hot, but the market was okay with that. It was the second one, the producer price index, which really was hit by commodity prices rising that really caused the market to freak out. Gas prices are going up. And so you're getting this rotation going on in the market where the Magnificent Seven, they're not doing so well, but you're seeing other things like materials, mining companies, they're doing much better. And so it's just a market where things are moving around.
Which of the Magnificent Seven has been demagnificented the most, and which is the most magnificent of the remaining?
Well, Tesla's been the ugliest of the bunch, but Apple's down for the year. Alphabet, they're basically flat. Nvidia's still the one that's riding high. Meta's done okay as well.
The next big rotation in the market, if it's not big tech, you said materials. What
materials? You got to look at energy. Oil prices are rising. There's these concerns over the Ukrainians taking out a refinery with drones. That's going to help oil prices and gas prices. Those are going to go up. That's going to be good for energy stocks.
What are you waiting to hear from the Fed next week?
Well, we know that they're not going to cut interest rates in March, and they may not do it until July. But what people really want to see is what happens to the dots. The dots have shown three cuts by the end of the year. Now there's concern that it's going to be 2 cuts. Is it going to be 1 cut? Is it going to be no cuts? We're not sure yet. And depending on how that goes, I mean, I think as long as the Fed is still leaning towards cutting, that will be okay for the market and supportive of the market. But if it starts sounding at all hawkish, that's going to be a problem.
Those little dots, it all comes down to the dots. Always.
Dots, yes.
Al, Boeing, the stock, had a terrible week again. Tell us about it.
Well, I mean, Boeing, the company, had a difficult week too, and it's really just a constant drip of bad news. So the stock down 7% for the week. Now it's down about 30% year to date. One of the 2 or 3 worst performers in the entire S&P 500, depending on how things finished up. There was a wheel falling off a United plane last week. That was a 22-year-old plane. There was the story of the turbulence on the LATAM flight with people getting pushed into people's seats. Everything has become a Boeing story. On the more serious end, United CEO Scott Kirby sort of talking down the 737 MAX jet, looking for additional Airbus planes. That doesn't sound good. You had a New York Times story that told us how bad Boeing performed in the FAA audit after that door plug blew out of a plane. And then there was an FAA briefing. Again, more negative news about Boeing.
Somewhere out there is a contrarian investor saying, okay, Al, you've got my interest. It can't get worse from here. Can it get worse from here?
Yes, it could get worse from here. Listen, so we wrote a story in February, basically said, you know, Boeing, what the problem is this constant drip of bad news is not going to stop. Could I imagine a scenario where an airline cancels orders for MAX 10? Yes. Could I imagine a scenario, MAX 10, the longest version of the MAX, not yet certified for flight? Could I imagine a scenario where Boeing says, you know what, we can't make all of these planes that we thought we were going to make. We're only going to make 30 a month, not 40 a month, as sort of is initially planned. I could absolutely imagine that. So the flow of bad news, or the flow of news, is still negative. We need to wait for a turn, so you just need to be patient.
Megan, Al's talking about constant drips of bad news, but you've got potential good news for people who might be selling a home. Real estate commissions could be headed lower. Tell us about that.
So the National Association of Realtors just today agreed to settle a series of lawsuits that we've all had our eyes on. They're going to pay about a little north of $400 million to settle the suit. But more interesting was the agreement that it was going to shift its rules on commissions a bit. So historically, the trade groups essentially led a system where home sellers agreed to pay 5-6% for commissions when listing their homes. And this is, split evenly between the sellers and the buyers. Now, those handcuffs, those rules of the road, are coming apart. And so what that means is, under the proposed settlement, home listings would no longer include upfront offers for the buyer's agents using multiple listing services. There's a lot of details in there, and of course, we're still sussing this out. It's a bit like, many of the things that we're talking about these days. Devil's in the details.
Ben, suss away.
Yeah, what scares me here is sounds to me like the cable bundle going away. They say, oh, it's going to make things cheaper for me, but really what it ends up doing is I have to own 6 streaming services and I'm spending more money, and that's it feels like is going to happen here. As a buyer of a house, I'm going to have to spend more. The seller's going to have to do their thing, and we're all going to end up
We've got about 20 seconds left. What, if anything, does it mean for house prices? Should I sell my house and move with my family into Al's house? We've got 2 dogs, Al, and one's a shedder, I'm going to tell you right now. What should we do?
So I think it depends on who you talk to. Yes, potentially this could substantially lower overall home prices. Certainly the Richmond Fed and others have really talked up the benefits here. Bottom line is, this is going to take a few years, according to pretty much everyone, to really roll out for consumers and, of course, buyers and sellers.
Well, thank you all. Inflation data coming in hotter than expected. Youch. Is it putting a dent in Fed rate cut hopes? And how is it affecting the market? Equity strategist Lori Calvasina is here to break it all down. That's next. Coming in hot, consumer and wholesale inflation have exceeded expectations. It hasn't done much to deter consumers, but what does it mean for the Fed's meeting next week and for the stock market? Joining me now is RBC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina. She's also one of Barron's 100 most influential women in U.S. finance. That's our cover story this week. Lori, did I see correctly that your target for the S&P 500 is 5150? Because that's about where we are now. Should I be concerned, or are you still bullish?
So 5150 is the year-end target. We're attempting to guess where the market is going to be on December 31st of this year. And we have 5 different models that we use to come up with that number. We have some that are below it, some that are above it.
I'll take the one that's highest, please.
Right. Well, the highest one right now is our valuation model, which is pointing to 5400 on the S&P. The lowest one is pointing for basically a flat market, and somewhere in the middle is actually our sentiment indicator, which is pretty close to the 5150 target itself. What that model is saying is that we're due for a short-term pullback in the market. Now, I've been saying that since January. It hasn't happened yet. But if you look at investor enthusiasm in the market on the AAII survey, net bullishness is above 1 standard deviation versus the long-term average. And when you're between 1 and 2 standard deviations, you tend to be flat over the next 3 months in the market. You only tend to be up 6.5% on a 12-month forward basis. So I tell people I still feel constructive. I'm not one of the big bad bears that's out there, but it may not be a linear path to get to the end of the year.
All right, constructive sounds good. Some mixed signals, but I'll take it. What about the Fed next week? What do you expect to hear there? Do investors need rate cuts soon for stocks to keep working?
So look, there was this camp that was expecting March cuts coming into this year. I was fortunate. My rate strategy team was not one of them. They've been telling us June cuts since last summer. So they've dialed down their expectation for cuts in the back half of this year from 5 cuts to 3. They have, sort of ratcheted down their expectations given some of those hot inflation numbers we've seen, but they haven't had as much distance to travel. I will tell you, in my meetings with investors the past 4 to 6 weeks, I've heard a lot of complaints, a lot of anticipation, frankly, of the hot inflation data we've seen this week. And also the idea of the March cuts, that's really been wrangled out. I think people have come to terms with that, and it's more of the hot economy that's driving the market right now.
You point out that most of the Magnificent 7 tech stocks have not outperformed since January. Is this the start of an ongoing shift in leadership? And if so, What are the new leaders?
I think it is. Now, this may be slow in terms of the shift. It may take some time to play out. But it's been somewhat Darwinistic when I hear people sort of picking names out of that Mag 7 bucket over the last couple months. It's really dwindled. And if your revenue growth or earnings growth forecasts aren't holding up, you're off the boat. I think that the hot economy, we're starting to see GDP forecasts come in at around 2.1% for this year. That's up from 0.6% last summer and just 1.6% as of mid-February. When the economy is hot, over 2.6%, typically value, cyclical, and small cap outperform. Large cap and growth really only outperform when the economy is cool.
What do you think will be the biggest surprise for investors over the next year, over the rest of this year? Give me somewhere where you're out of consensus.
So I'd say probably one of our more out of consensus calls is our overweight on healthcare stocks. I hear from a lot of investors, I can't own those because it's a presidential election year and they tend to underperform in presidential election years. The data does bear that out, but we actually don't think healthcare is a high priority for either party going forward. And the valuations look reasonable, and it's been a sector where you've actually seen stronger earnings revisions than you have in the rest of the market, whether you're looking at large cap or small cap.
I know that you're a stock strategist. You are not a cryptocurrency strategist. I'm not going to ask you for a buy, sell, or hold on Bitcoin, but as it's running up and hitting new highs, does that get you thinking anything about the state of investor excitement, exuberance with regard to stocks?
So look, it's not something that necessarily tells us that the market is overly exuberant, but it does tell us that comfort with risk assets is rising, and we have seen a decent correlation between S&P pricing and Bitcoin. So that's a chart we have in our weekly often, and we do watch it to see just evidence that risk assets, risk tolerance is alive and well in other markets, and that's what we're seeing right now.
Lori, thanks so much for speaking with us.
Thanks for having me.
TikTok block. Could Congress be on its way to banning the app? We're breaking down what's at stake next. Fight for the fate of TikTok shifting to the Senate as the CEO lobbies against a ban on Capitol Hill. Big name buyers already lining up to purchase the social media giant as Congress mulls whether to force the app to sell. This as TikTok becomes a key topic in the presidential race. Deputy editor of Barron's Alex Yule joins the panel. Alex, I'm not starting with you, I'm starting with Megan, but I'll get to you soon enough. Megan, where do things stand right now in Congress?
So this past week was an interesting one. We had the legislation pass the House, but we're waiting on the Senate, and there's no timeline thus far on when we can expect this legislation to pass. And of course, now this may have political upsides beyond that. Certainly, Trump has flip-flopped a little bit. Biden has said he'll sign it if it gets to his desk. That could be potentially problematic for younger voters.
Did you say TikTok flip-flop? Is that what you're calling this?
That's a nice turn of phrase.
Alex?
Look, I think for all the talk we've had about TikTok and social media over the last few days, what matters here is that 352 members of Congress agreed on one thing.
That's encouraging. What does it mean for the election, you think?
I think what it tells us is that geopolitics, more than ever, and this has been building for the last few years, and even a dose of protectionism is really what's taken over the main topic in Washington right now. It's something that investors really need to be focused on.
Ben, you were saying this should have happened a long time ago.
A very long time ago. Facebook and other social media companies in the United States aren't allowed to work in China, and why should TikTok be able to be here until they're allowed to be there?
Well, Ben, I'm stealing your question then about Meta, Facebook, Google, Snap. Are there investable implications from a TikTok ban?
I mean, Facebook and Meta, its parent, have been talking about TikTok as a threat for years. It seems that if this were to happen, there's a pretty big beneficiary in the form of Facebook and Instagram, the Meta platform's properties. YouTube Reels, which is YouTube's short video product, also would benefit. I mean, these people have to go somewhere.
I have a 13-year-old.
So there you go. I mean, I think that there's no mystery as to who benefits from a lack of TikTok. So I think that's something we'll see play out if it happens, but it's a big if.
Megan, I want the minutia on Mnuchin, if you will, please. The former Treasury Secretary, is he really going to rally an investor group to buy TikTok? Give me a probability.
I think the odds are pretty low, to be honest. Now, I mean, look, like the valuation for the entire parent company, ByteDance, is somewhere in the range of like $200 billion. Obviously, estimates vary a bit, but I don't understand, how that really works, because it's going to have to get carved up, assuming that someone ends up being a buyer. And really, how this gets packaged really will certainly impact the valuation, the price, and so on and so forth.
What about other potential buyers? If it's not going to be Mnuchin, who might it be, Alex?
I mean, 50 billion, 100 billion, 200 billion. This is a massive deal, right? The only people you could see, the only companies you could see really being able to pull this off are the big tech companies, maybe Walmart mixed in there because they seem to be interested. But how does that work when Washington's other big initiative is trying to get big tech smaller? I don't see how this works.
Walmart, any others? Who's big enough?
Microsoft, Walmart, I think
have any of them expressed interest? Is it too early to print the headline?
I think if we had to come up with three companies, what we're seeing is Oracle, Walmart, and Microsoft seem to be the companies that may be interested.
Well, let's put in a call to the FTC. Let's be honest. The Biden administration has certainly been on a, competition and anti-competition sort of role at this point. That's going to be tricky to get any of that deal put through.
Absolutely. They didn't want Microsoft to buy Activision. Why are they going to let Microsoft buy TikTok? It doesn't add up.
This would be a bigger deal.
And this would be probably a bigger deal than that $87 billion deal, most likely.
You've said we might be getting ahead of ourselves on this kind of speculation. I love speculation. I love getting ahead of ourselves. But why is it? Where are we going wrong here?
I think we still haven't passed the Senate. I mean, come on, guys.
Come on.
I think that we've had a lot of great legislation over the years that have died in the House, and we just haven't really seen it come to fruition. I know that we're seeing a lot of interest in this. I think it's really positive, and Alex pointed out, we did get some bipartisanship here. That's impressive, and it certainly is more so than we've seen in other legislation that has died in the House. But until we get Schumer and a few of those other leaders in the Senate saying, yes, this is getting done, and putting some real timeline rails around this, I just think this is all a nice, fun thing to talk about, but I don't know. This feels a little like we're ahead of our skis here.
It is a fun thing to talk about. I would like to announce that I have kicked my TikTok habit. I was going pretty strong on a thing for about 30 days there about a year ago, but then I banned my kids from TikTok, and then I figured I had to ban myself. Who here is using TikTok on a regular basis, looking at it?
Sorry.
Because this is a young bunch, a poor demographic here.
You know what, though?
Thanks,
Let's
Jack.
think about this. There are unintended consequences of this. I mean, we have the content creators, we have small businesses, we have large businesses doing a decent amount of investment and activity on this platform. I mean, if you're a small business, then you've set up a TikTok shop, this might be bad news for you.
And even large businesses.
Yes.
Elf, the makeup company, Duolingo does a lot on there. They've invested a lot of money in this.
Right?
Thank you all. Megan and Ben have a pair of investment ideas, and Al says Elon Musk is taking us to infinity and beyond. Stay right there. Al, big rocket ship news this past week, not just talking about those emojis that readers put under your stories at Barron's.
Yes.
Tell us about it.
Great week for me. I love space, and I'm an unabashed SpaceX fanboy. They did their third test of the giant space Starship launch system, largest rocket ever built. 400 feet high, twice as powerful, 2 to 3 times as powerful as the Saturn V that took us to the moon. They tested it. It went into orbit for the first time, largest object ever to orbit the Earth. So now they didn't recover any of the pieces, but still a wildly successful test for SpaceX.
Sounds crass to make this about money, but is Elon Musk going to IPO SpaceX? Let's make it about money.
So probably not. So the images from that test were sent back via Starlink, SpaceX's space-based Wi-Fi system. That has 2 million subscribers. Based on recent data, 900,000 outside the U.S., multi-billion-dollar business. He said he might IPO that, but no timeline.
Very quickly, are we going to make it to the moon by 2025?
Yes, Artemis 2, but we only circle the moon.
Am I going to be able to retire on Mars?
No.
Dagnabbit. Megan, you've got some tax advice for us.
I do. Everyone's got a month, so we can all, breathe if we haven't actually filed. But for those who have, they might end up waiting a little bit longer if they're doing a refund. The IRS has actually issued 14% fewer refunds this year than it had last time this year. If you are interested in, trying to figure out when you're going to find this information out, they actually have a tool, they have a tracker, and you can get Where's My Refund? So check it out.
Where's my refund? Ben, you've got a stock pick for us. The way that Al feels about space, I feel that way about cement. I'm a cement fanboy, and you've got something for us.
Well, I'm sure you're waiting for people to put your feet in cement and throw you off the side of a boat.
Wait a second.
But But Cemex is a company from Mexico. They make cement.
Cemex.
Their ticker is CX. They're benefiting from nearshoring. They're benefiting from infrastructure spending. They just got upgraded to investment grade, and the stock has been doing very well. And when you look at some of its competitors, they're not quite the same. But you have Martin Marietta Materials, you have Vulcan Materials. This stock is much, much cheaper. It's trying to break out above $8.50. If it can do that, I think there's a lot more upside ahead.
I like businesses like cement and rocks because everything's heavy and you got to get it from nearby. You can't Amazon aggregate. You got to get it from the local quarry. It makes for decent margins, I think.
Easy business, too. You just dig it up.
Yeah. All right. By the way, don't mess with Ben. He's got ideas on cement that you don't want any part of. Ben, Megan, Al, great ideas, and thank you. To read more, check out this week's edition at barrons.com. Don't forget to follow us on X at Barrons Online. That's all for us. See you next week on Barron's Roundtable. And enjoy this St. Paddy's Day weekend.